people are happy with doing flips. Some people hate doing flips. So it's whatever you're okay with. Now,
Hello and welcome back to another episode of Real Estate with the Premier Group. I am your host, Calvin Shropshire, broker and owner of the Premier Group, doing business as eXp Realty LLC. Today we have a special guest with us. We have a big-time investor, Justin Huggins. Justin is a good friend of mine, but he has also taught me some high-level investing techniques, and I thought this would be good for everyone to learn what I've learned. So, Justin, welcome to the show, and tell us a little bit about yourself.
Yeah, thanks for having me. So I started real estate investing in October 30th of 2015 is when I bought my first rental property. I buy property, sell property, hard money lend, all that good stuff. Right now, I own a couple companies, a wholesaling, flipping company, two holding companies, and also a title and escrow company. So all different facets of real estate.
Oh, yeah.
Yeah.
And so we had your wife on here a couple of weeks ago.
Yes.
Who's also part owner of that title company as well, too. So
Yes.
interesting. You mentioned you bought your first property when you were 15, correct?
Well, in 2015.
In 2015.
So about almost 8 years ago now.
Yeah. An interesting story of that. Your first tenant was your wife, right?
Yes. So everybody pays rent. Is what
Oh,
I tell
yeah.
them.
I
So
love that.
she did have to pay rent. But yeah, the first property was a duplex. I bought it with an FHA loan, lived in one side, rented out the other. So the tenant paid almost all of the rent.
Nice. Now, typically, what type of properties do you look for when you're considering an investment?
So I tell people I'll buy anything that's a deal. So I own a bunch of single family homes, some small multifamilies, some small, like some duplex, triplex, quads. I own some storage units. I own a sorority house, some land, all different kinds of things, a couple commercial buildings. So literally I assess every deal depending upon what I can make money doing, whether it's buy with cash and flip it, buy with cash, refinance it, or what people call the BRRRR method. Sometimes it is a appreciation hold more than anything, or it's got some different facet to it that we can make money off of or use as a tax strategy.
Okay. Now, do you recommend someone diversifying their portfolio? I know some people do short-term flips. Some people do long-term holds. A lot of people are into Airbnbs right now. I feel like Chattanooga is kind of cracking down on that, though, with the moratoriums. What's your thoughts on that?
So there's tons of different ways to make money in real estate, and whatever you're comfortable with. So different things have different level of risk. Some people like doing Airbnbs, and Airbnbs cash flow really well. There's always some risk there, but it does cash flow really well and probably is a lot better than the risk. Buying a single family home, you got to be able to stomach the fact that you may have a mortgage payment, you may not have a tenant for a few months. You be okay with that. Some people are happy with doing flips, some people hate doing flips. So it's whatever you're okay with. Now I would say diversifying your portfolio is always good. When you start out, you should start out figuring one avenue out really well. Whether that's Airbnbs or it's, hey, I'm going to do storage units only, or I'm going to do single family homes. Whatever you choose to do, you just need to figure that avenue out before you start branching out to other things. Because you've got to figure out, like, if I'm going to buy land and I'm going to flip land, you might have to have a lot of cash up front, and say you're listing it when you flip it, it might sit there for 6 to 8 to 12 months. You have to be okay with that, and you kind of have to know that beforehand. And you could be using that cash somewhere else if you need to do that. So there's so many different ways you can make money. There is risk on every single way. Nothing's absolutely perfect. And you have to be able to sleep at night, is what I tell people. If you put your money into a project, you can't lose sleep over it. You have to understand, I do this going into it.
Gotcha. Typically, when you invest in something, let's just say, I know recently you just bought a property that you're going to be doing an Airbnb with, right?
Yeah.
What type of what type of percentage return do you usually look for in those type of investments
So
or margin?
I and it keeps changing with the market a little bit. A great deal is 1.5% per month, which comes out to 16% per year. Easy way to like calculate that would be, say you buy a property for 100,000 and it rents for 1,500. That would be a 1.5% return per month, or 16% every year. If you are buying in cash, great returns like that's always great. It's
Mhm.
getting harder to do that. On the market, you were seeing 1%, and then it started to float below 1% returns per month. Now, I'll say if you're doing the Burr method, you're buying, renovating, refinancing, and repeating and buying again, you really need to be at 1.25 because that's what the banks want to be at. Every single bank wants you to be at 1.25 to really finance 100% of that deal. There are deals that I've bought that have no return on the front end, but they have massive equity whenever we buy them. One of my best deals was a commercial building we bought for $300,000, but it didn't cash flow. It didn't cash flow for a while and needed a lot of rehab. But the day we bought it, it was appraised and it was worth 1.6. So I'll spend 300,000 to buy 1.3 in equity any day,
Oh
even
yeah.
if it's cash flow today.
Wow. Wow.
Yeah. So that's where every deal can be a little different. And like I said, I own storage units. So like the return on storage units is a lot lower. You're usually at like 0.7% per month return. So when you do that, you're weighing the difference of a single family home takes a lot more time to manage, where storage units take a lot less time to manage, a lot less repairs, a lot less
Mhm.
damage. So you're exchanging time for money on that. So some people want more time and they're okay with less returns.
Gotcha. Okay. Now you brought up some points in there about how you that property evaluated. You said for 1.3 or 1.2 million,
1.6.
1.6 million.
Yeah.
Yeah. And so that gave you, I guess, the motivation to go and move forward with it, right? Because it was kind of a long term play on that.
Yeah.
Something that I've learned from you, and this is what I thought was pretty cool, is we talked about like different ways of getting creative with financing. A lot of people think you have to have money to buy an investment property, right? But
Right.
is that true, or are there options around that? I mean, tell us a little bit more about that.
Yeah. So I'll tell people honestly, it's easier when you have money because you can walk in, offer cash, buy something at a discount. So it's always easier if you had the money on the front end, but you don't have to have money to buy anything. Uh, when I was broke as could be, I bought 11 units. It was 8 properties from a lady, zero money down. Me and a partner contacted her. She was willing to own or finance her 8 properties that she had. So with her closing everything, she just became the bank. So she held a mortgage against the property. We put her on a 10-year payment plan and paid her monthly plus interest. And so that was for her tax strategy and her retirement purposes. That worked well for her. So anybody that owns a property free and clear, they always have the option that they could turn around and own or finance it and be the bank.
Mm.
Um, there's some benefits for people that do that. There's also situations where someone does have a mortgage on the property already, and you can take over payments on that mortgage. The technical term is purchasing a house subject to the existing mortgage, which a lot of people just abbreviate as sub two. And you buy a house, the deed changes names into your name or your company name, and you just take over their payments. So people that are in rougher situations that may not be able to make their payments anymore on their loan, and instead of going through a foreclosure, are able to sell to an investor like us, and we can take over those payments. So I've bought a lot of stuff through owner financing, a lot of stuff through sub two. There's lease options that you can do. There's land contracts. Some people call rent to own is another kind of word or kind of strategy around that.
Mhm.
So many different ways you can do real estate without having any money up front. You just have to look for the opportunities and offer those opportunities to people and understand how they work.
Gotcha. Yeah, it's interesting to me because I've learned so much from you on the investment side of it. Um, so if you had to give someone advice who was starting to get into investing, as a real estate agent, I get a lot of people that say I'm an investor. We get
Yeah.
people that register on our website nonstop. I'm an investor. And they've never actually invested, right? But
Yeah.
everyone's an investor. But if you had to give someone advice who was getting started on investing and getting ready to figure out what type of investing is going to, I guess, help them get their feet on, get off the ground, what advice would you give someone?
So the number one thing is to pick a strategy and pick a area that you want to invest. So some people start out in wholesaling because they have no cash. And what that means is they go and get a property under contract, assign it to an end buyer like me, and they make the difference in the middle. That's a no cash thing. It's not really investing because you're not putting your own money into it in order to make a profit. But that's one way. But
That's more
picking,
of a time thing, like more you're putting your time in and not the.
yeah, and getting paid for the deal that you provide. So if you invest, different people like different things, and different people have different assets to put forward. Honestly, if you have the cash to put forward, buying single family homes or multifamily property is great. Airbnbs are always good. I, as long as the city doesn't crush you on them, Airbnbs are always a fair avenue to start in. Uh, Either through getting leases and doing Airbnb arbitrage, or just owning a property outright in a good area that's got high traffic and furnishing it and doing that. Um, if you say I don't want to own property, I'm scared that a toilet's going to get clogged and I'm going to have a tenant call me because the air conditioning's out and all this stuff. One of the easy ways is if you do have cash and want to get money in return, but don't want to have as much risk or do anything, you can also lend money to investors like me and other investors who will take your money. They will buy real estate. They'll take the liability. They'll have to fix the toilets and handle all that, but they give you a consistent return every single month. So that's the hands-off way that you can make money. There's no perfect way. You should always start in single family homes or you should always start in duplexes. Like I started in duplexes because I used an FHA loan and put $3,600 down at closing because I only had $3,600.
Right.
That's what worked for me, but anybody can pick an avenue that they are comfortable with. And I tell people, you got to be able to sleep at night. This can't be so overwhelming that it freaks you out. There is some level of risk, but eventually you build up your risk tolerance. Like over 8 years, I think I'm a crazy person. I'll buy properties, walking through them one time. We'll walk through and say, yeah, I'm good. I'll buy this at X dollars. And there's been properties I've flipped that I've never even walked through. I've sent a general contractor over there. He's giving me the assessment and he gets to work on the property and we flip it. And I've never even seen the property. But maybe I'm a crazy man. I don't recommend that for everyone. But that's the risk that I'm able to tolerate these days. So whatever makes you happy, and it's easier if you get with an expert. If they get with an agent like you that understands the market and understands these are the areas, and hey, this is what I want to do. I'm looking for a long-term rental, or I'm looking for a short-term rental, or I'm going to flip. Someone who understands the market and can run comps and can give you advice will help. And they need to be pushed towards someone who can guide them a little bit in that.
Mm-hmm. Now, I hear all the time, especially from investors, oh, I'm waiting for the market to crash. I'm waiting for things to drop, right? When there's really no signs that that's going to happen, especially if you look at past trends of recessions prior to 2008. Yeah. So with that being said, do you still in this current market continue to invest?
Yeah. So I don't think the market's going to crash. We talk about the Great Depression because the Great Depression happened so fast, so hard and everything. And we never want that to happen again. Right. 08 was the housing's Great Depression. COVID should have proved this to people, but the government will not let '08 happen again. They're hiking interest rates. Yeah, it's not great on that, but they're not going to let the housing market crash again because '08 was so bad and it's so prevalent in people's minds.
Mhm.
Like, you may have other sectors go down, but they're going to protect housing. I mean, that's what they did during COVID. So you may see prices go down a little bit because of interest rates, but I don't think you're going to see it crash and you're going to be able to buy stuff up super cheap. Um, I know investors who have pulled their cash and are sitting on the sidelines, and that just opens up more opportunities where I go out and buy houses, flip, rent, refinance, all that. I'm still buying property. I'll buy anything that's a deal. If I for some reason don't have the money, I will go out and get the money. I wish I had been able to buy properties in 2015 all the way up until now when I didn't have as much cash. I wish I had gone out and said, "Hey, will you invest with me?" Just to try to get more properties, because appreciation on average has been 10% per year. So you can get great returns plus tax benefits if you go out there and invest. Uh, I just sold a flip last week, selling another flip this next week, and then buying two more. I'm trying to buy a small multifamily right now, 16 apartments. So we're under contract, and so hopefully that goes through. But my investment strategy definitely changed in the fact that when interest rates went up, if I did want to go to banks to get money, I had to make sure I bought at the right price.
Mhm.
The debt service on a higher interest rate is a lot more. So banks want to make sure you can cover the debt that they loan to you.
Right.
So while I've adjusted, I've not stopped buying.
But
Not
for
at all.
okay, so and that's good because, and I'm glad you mentioned that because, like I said, I hear it all the time. I literally just had a conversation with someone not even 3 hours ago, and they said, "Well, we're waiting for the market to crash." And I just simply asked them, what information do you have that reflects that the market's going to crash? And they said, "Well, interest rates are higher, but they're not higher; they're just back to normal, right?" Back,
That's the thing is people, especially my age, don't understand that 3% was the abnormality.
right,
Like, their parents bought at like 12% interest rates. I mean, they were used to that.
right.
We've just come accustomed to, oh, this is how low interest rates are. And eventually they probably will go back to that, but you can still buy today, even if it was an 8%, you can buy a rental property.
And
You just
refinance, right?
Yeah, you just want to make sure you buy it at the right price and that it'll cover in cash flow. I love people that don't understand cash flow and they're like, oh, it's a cash flowing property. Just because it has a renter in there does not mean it's a cash flowing property. It
Mm,
can negative cash flow with a renter. So you got to make sure it covers the payment, the insurance, the taxes, vacancies, all of that, and it puts money in your pocket. That's when it's cash flowing, is when it's actually covering the debt plus some.
Now, is there a specific margin between the actual debt and the amount that you have coming in that you look for on that?
Yeah, so it varies, and I'm not super cutthroat on it. It has to be this. There are some things like when I buy subject to, because I know what the debt service is, and I won't change that or can't change that super readily. So like on a sub two, I want to cash flow at least $250 a month. If it's below that, it's going to be a stretch on that property. So I consider every property like its own little soldier that goes to war every month and has to make its own money. It's not the fact that the portfolio just blends together. I want every single property to cash flow, because if every single one of them is cash flowing and doing the right thing, the whole portfolio as itself will be profitable.
Okay.
It's start leaning them up against each other, you get a house of cards. So I try to be at least at $250 in cash flow. Now, when I buy them with cash up front, I don't have a mortgage. Obviously, they're going to cash flow at least that. So
Mhm.
I think ahead of where my loan would be if I do finance out. So Have I had some that were at $50? Yeah. There were some that are just terrible. And some we know are going to go through a transition. Like we understand I've got a tenant in there not paying enough. They're going to have to either go up on rent or they're going to have to move. And then we're going to have to go in there and renovate. And it also depends on how much of a renovation budget you have. If I spend $60,000 out of pocket and can't get that money out on a refinance and I only make 250, it takes a long time to get that $60,000 back.
Right.
So you want to be at like, hey, I've spent 10 out of pocket, I'm cash flowing $500 a month. I'm getting that money back as fast as possible so I can redeploy that 10,000 somewhere else.
Okay. Interesting.
Yeah.
So one other thing too, we talked about early on, you talked about wholesaling subject to, there's some other ones too. I've seen some investors get started off by going in and becoming a renter in a property and then turn around and they may use that as that property as an Airbnb, depending on how they wrote the contract out with that owner, or they may rent it out themselves, right? Can you explain that a little bit more about that?
Yeah, so some people call that Airbnb arbitrage. You're basically getting a sublease too. So what happens is I go in if I want to do this with someone that owns the property, not myself, and I get a lease signed with them. Usually what some people would see as a corporate lease, like, hey, I'm going to sublease this. Like I'm going to be very upfront with you that I may stay there sometimes, but most of the time somebody else is going to stay there. And it's best if you just tell them straight up, I'm going to Airbnb your property. We want to make sure your insurance is right, that covers that. Most do, but you just wanted to make sure because you want them to be covered. And you up front tell them everything you're going to do. Now, what's cool about that, the investor who owns the property is going to get their money every month on time. They know this person has extra reserves. This is their business model that they're going to do. So say they're going to get $1,000 a month in rent, just for easy numbers. The investor who's going to run the Airbnb comes in, they buy all the furniture and everything. Say it costs them $7,000, but furniture, TVs, supplies, and everything. They Airbnb it and they cash flow 2,500. They make 2,500 a month gross. They pay off the 1,000, they make 1,500. So in 5 months, they've made all of their initial investment back, and then they start cash flowing $1,500 a month on a property that they don't have any liability, they don't own. They always know that their payment to the person is the exact same. They don't have to worry about taxes or anything like that. So
do they have to worry about maintenance too?
They may, depending on how you do the lease, they may have to worry about maintenance. Most of the time, the people want to worry about maintenance because they want to be in control of it and make sure it's fixed. Like if the condition unit goes down, they want to be on top of it and make sure it gets fixed for their Airbnb versus waiting on the owner of the property to do it. Depends on how you want to do your lease or your structure with them. So one of my friends has leased properties to someone that's doing the Airbnb. So it's a great thing for both of them because one guy wants long-term rentals, doesn't want to do Airbnbs, and one guy wants to do Airbnbs, but doesn't have the rental in place. So it works. I am opening Airbnb later this year. Like I said, I bought a property. My city allows me to have owner-occupied Airbnb permits. So I already got the permit, so I'm legit. That's almost the only way that you can get them in the city. There's some zoning that'll let you get it, but owner-occupied you can. Run the Airbnb ourselves and do all the managing and hire the cleaner and everything. And we own the property. I try to own as much property as I can because I need all the tax benefits that I can through depreciation, write-offs, everything. And it's all, for me, some people invest in their 401k as their retirement. I buy property. That's my retirement plan.
Gotcha. Interesting. And that's basically your retirement, right? Your whole portfolio.
Yeah. So there's some stuff that's on, 10-year notes, 15-year notes, 20, or, things I bought, personal houses I bought that I then rented out are on 30-year notes. Like the first one I bought, that duplex I bought in 2015, I've owned for be 8 years this year. It was on a 30-year note. So in 22, 23 more years, it'll be completely paid off. So
Hmm.
they don't have mortgage to have to pay anymore.
Now, how many properties overall do you own, if you don't mind me asking?
I'm at like 55 or 60 properties. And I just count my commercial as property. Some people count commercial based on square footage. And if we did it based on square footage, I'm at like 20,000 square feet of commercial, 24,000. I have an extra one that I don't really think about often. So, but I've got 55, 56 pieces of property that we own.
Hashtag goals.
Yeah. So
Yeah.
that's like the big thing. The big thing is to try to get over 100, and 100's a lot to manage and a lot to handle. But there's several people that are over 100, but not that many people get to 100 pieces of property. It's a big undertaking. So I tell people they gotta remember, and they look at it and they go, oh, well, he has 55. I have to have 55 to be successful. That's not the case at all. And small steps are what gets you there. In 2015, I bought one piece of property. 2016, I didn't buy any. 2017, I bought one. 2018, we bought three. Then we bought 5 in 2019. Then it was 25 in 2020. And then through that, I've sold some of those off. But every year, I just keep trying to add more and more. So it's small steps. You have to make small progressive steps. Progress and not perfection is what we shoot for.
Right. Okay. So if someone wanted to reach out to you, do you offer any type of like courses on how to get started, or any classes, or anything for the public who maybe think about getting into investing and just needs that guidance or that roadmap?
Yeah, so I will do consulting. I don't have like a course, and I don't charge like, an hourly thing. Depends upon the situation. I teach a lot of people how to start out in wholesaling and how to make money just finding deals and selling them to investors. That helps generate cash to where you can turn around and start using money to invest for yourself. If you've got money and you want to invest, I can help you do that. If you've got money and you want to be a lender, you're like, I don't want to actually own property. I'm afraid of that, but I understand that I can make money by lending. Myself or other people I know will be glad to be interested in that and talk to you about that and how you can make money sitting at home doing absolutely nothing. And if it doesn't have to be cash that you have in hand. A lot of people forget that if you have a 401k, you can change that into a self-directed IRA. You could buy property with an IRA. You can also lend from your IRA to investors so they can buy property. And all of that money can be tax deferred and stay in your IRA and build that up. So there are several ways that someone can make money with me or beside me in this industry, and I'd be glad to talk to them.
Awesome. Well, Justin, I appreciate you being on here with me. I want to ask you one more favor. Would you ever be opposed to putting together a class?
I would. I've just never sat down and done it. But I would, but I've just never sat down and put together a course or anything. But
no. So what if I structured something and got it all set up, and we just invited people in, and you just taught a class where we all learn about investing for an hour or something like that?
Sounds good. If I can teach anybody anything, I've had a lot of good mentors throughout the years and partners that have helped me. So I'm happy to share what I know, and it may make somebody else's world a better place. So I'm
Awesome.
glad to do it.
I appreciate that, Justin. How can people reach you if they want to get a hold of you?
So I've got my email is Huggins Homes LLC at gmail.com. And I'm on Facebook as Justin Huggins. And those are probably the two easiest ways to reach out to me.
Okay. And if someone is maybe looking to get a cash offer or something pretty quick and just needs to get a property off their plate, they can reach out to you for that as well too. Is that correct?
Absolutely. I buy property every day. I'm looking for more. Awesome. So we can either rent, flip, or do whatever we can, but we're glad to help anybody if they've got a problem property that we can take off their plate.
Okay. Thank you so much, Justin, and I appreciate you joining us today, and look forward to putting that class together with you, my friend.
Sounds good. Thanks for having me.
Yes, sir. Thank you.
Thanks.